Imagine a world where you don't need banks to handle your money. A world where you can send money to anyone, anywhere, instantly with minimal fees. This is the promise of cryptocurrency, a revolutionary technology poised to reshape the financial landscape as we know it. At the forefront of this revolution is Bitcoin, the first and most well-known cryptocurrency. Bitcoin is a digital currency existing only in the digital realm. Unlike traditional currencies issued by governments, Bitcoin operates on a decentralized network, free from central control. This means no more banks dictating the terms of your transactions. No more exorbitant fees for simply moving your own money. Cryptocurrency empowers individuals, giving them greater control over their finances. The rise of cryptocurrency signifies a paradigm shift, a move away from traditional financial systems towards a more open, transparent, and accessible financial future. But how does Bitcoin actually work? The answer lies in a groundbreaking technology called blockchain. Imagine a digital ledger, a record of every single Bitcoin transaction ever made. This ledger is not stored in one place but copied across a network of computers worldwide. This distributed network is the blockchain. When you make a Bitcoin transaction, it's like adding a new line to this ledger. This transaction is then broadcast to the entire network and verified by multiple computers. This verification process ensures the integrity and security of the Bitcoin network. Once verified, your transaction is added to a block on the blockchain, creating an immutable record. This revolutionary system eliminates the need for intermediaries like banks, making transactions faster, cheaper, and more secure. The blockchain technology underpinning Bitcoin has the potential to revolutionize not just finance, but various industries, from supply chain management to healthcare. The benefits of cryptocurrency extend far beyond just faster transactions. Decentralization is a key advantage, shifting power from centralized institutions to individuals. This means no more banks controlling your money or governments manipulating currencies. Cryptocurrency transactions can be significantly cheaper than traditional methods, especially for international transfers. This is because you're bypassing the hefty fees imposed by banks and other financial institutions. Moreover, cryptocurrency offers greater transparency. Every transaction is recorded on the public blockchain, making it easier to track and audit transactions. This transparency can help reduce fraud and increase accountability. The potential applications of cryptocurrency are vast and still being explored. From facilitating micropayments to empowering the unbanked populations, cryptocurrency has the potential to drive financial inclusion and innovation globally. However, the road to a cryptocurrency-powered future is not without its bumps. The volatility of cryptocurrency markets is a major concern. Bitcoin's price, for instance, has been known to fluctuate wildly, making it a risky investment for the faint of heart. Regulatory uncertainty is another challenge. Governments worldwide are still grappling with how to regulate this nascent technology, creating uncertainty for businesses and investors alike. Security concerns also persist. While the blockchain itself is highly secure, cryptocurrency exchanges and wallets have been targeted by hackers in the past, highlighting the importance of robust security measures. Despite these challenges, the potential of cryptocurrency is undeniable. As technology evolves and regulations mature, cryptocurrency has the potential to revolutionize our financial systems, empowering individuals and fostering a more inclusive and accessible financial future.